Welcome to another riveting edition of Risk and Return. My name is Charlie Gasparino. My partner in crime, the granddaddy of data from S3 Partners, Bob Sloan, is not with us. He's playing hooky for the second week in a row. We do have one of his right-hand men, Matthew Unterman. He's here to break down the shorts and the longs and the actionable calls and the battleground stocks that you can only find from S3's exclusive data that we provide you here on Risk and Return. I'm also going to give some news updates, the insane situation going on with Netflix's battle to take over vast parts of Warner Brothers Discovery. That looks like it's on real shaky ground. Ted Sarandos has to go to D.C. tomorrow to maybe short things up, but it's going to be an uphill battle for a lot of reasons, which we'll get into. A little bit on the trade stuff, like if you are a company, how do you get a refund? We're going to walk through the process. Not easy. And many more headlines that I'm coming across over the last 24, 48 hours. I try to give you the best stuff I have and actionable to the moment. And let's get to Matthew's stuff, since it is, in my view, some of the most actionable data on Wall Street. We should point out that S3 is the number one independent data provider on the Bloomberg terminal. It's that way for a reason. Matt, take it away. You got some great stuff today about NVIDIA, Live Nation. I saw the rundown. It was pretty fascinating.
Sure.
As far as I'm concerned.
Sure. Well, thanks so much for having me. I'm really excited. Just a quick background on me. I've been at S3 for 10 years now. I worked at Morgan Stanley.
You survived, Bob, for 10 years.
Surviving and thriving, hopefully. 15 years at Morgan Stanley. Prior to this, working within the prime brokerage securities lending division. So we have loads of experience here at S3, and we have a great team, very, very knowledgeable people.
As you do, and I'm proud to be part of it, by the way.
Yes, Charlie, we love you over here. So you want to start with NVIDIA? We could do that, or we could do
it's always good to start with NVIDIA for lots of reasons, including the size of the stock, the market cap.
Sure. Well, as we know, it's reporting today, right? Reporting right now, actually. It probably already hit the tape. But we put out a research piece on NVIDIA on Monday. Boys, you want to bring up the S3 Partners top 10? Yep, exactly. Great. So as you could see on this top 10 list within the S&P 500 or the SPX, NVIDIA has $50 billion worth of short interest at the moment. And as you can see with the top 10 shorts in terms of notional or dollars at risk, the Mag 7 make up a very healthy portion of the shortage within the SPX. So if you look at the top right, the total notional, you have $1.1 trillion in short notional or short interest notional within each constituent in aggregate in the S&P. And as we can see, NVIDIA is number one at 50 billion, sorry. With its earnings today, the options market was pricing in about a 5% move after the close. So a 5% move on $50 billion is around a $2.5 billion one-day swing. So as you can see, with the short interest as a percentage of float are really not that elevated on any of these names, but you could see the dollars at risk.
Right.
Against NVIDIA, 50 billion.
By the way, the stock took a little bit of a turn down at the bell. It's still up after hours, marginally. It was up about 2% today.
It was up 2% today.
1.5% it ended up. It's now up another 0.3. But it did take a hit at the bell. I'm not seeing anything on the numbers just yet.
Okay. Yeah, let's keep an eye on it. Absolutely.
Keep an eye on that.
After hours up a tiny bit. But risk managers really monitor value at risk, right? And gross exposure in dollar terms. So despite the Mag 7's SI percentage of float being relatively, let's just say, I don't want to say immaterial, but low. The dollars or the actual capital that is on the short side of these trades are all very material. Now, if we go to the technical chart, fellas, beautiful. So I love technical analysis. And as you could see, this is NVIDIA's price chart, okay, over the past year. And as you can see, since July, NVIDIA has been trading in this tight range of about 170 to about $200 a share, that $30 range.
Right.
And typically, when stocks hit that support level, which you could see on the bottom line, and hits the resistance level, which is the top line, there's no trend, right? It's pretty much a smooth sailing going across the screen. Now, typically when stocks trade in this range, after the longer it trades in the range, the more explosive the break out of the trading range is.
Huh.
So we shall see, depending on how NVIDIA, which is essentially the most important stock in the world, fares today. And there should be a break out of that range over the coming days, hopefully.
And maybe
Now,
even,
looking,
and maybe even tonight after hours, we should point out.
Mhm.
I mean, one of the reasons why it is the most important, it's like, every NVIDIA, in some ways, I mean, if you're going to make some meta statement, it encapsulates all the fears and all the promises of AI, right? The fears
Yes.
that AI could take over the world, be a job killer, the notion that it's going to essentially lead to massive productivity gains, the notion that it's going to put some companies out of business, including software companies that have huge market caps that are the market leaders for the longest time, like Oracle. So, I mean, this stock is like a paradigm of something more grandiose, and that's kind of why we're looking at this purely from a technical standpoint.
Mhm.
You're plotting the short and long. Where's this come out in this? Is it pure battleground, this thing, or is there
No,
a
NVIDIA, a lot more active long interest than short interest on NVIDIA, which is typically the case with a lot of the mega cap names. The battleground stocks, which will hit one next, do have equal long interest, active long interest, and active short interests, right? Notional. So when those are the same, we call those battleground stocks.
right?
Usually, if
I
they're
get
long,
that, but just for the viewer, what you're
Mhm.
saying on this is not a battleground stock. But what's interesting about this, and it's based on S3's charts, it's how it's trading in that band, that
Mhm.
interesting band. It's almost a flatline-ish band, and when
Mhm.
you get that for that extended period of time, according to your data,
Mhm.
something sort of a catalyst could send it rapidly higher or rapidly low. Obviously, if they miss earnings, this thing is getting crushed tonight. If they
That's it.
don't, we could see a spike up. So if you're trading this thing, that's kind of what S3 data is saying to you. Did I interpret that right?
Yeah, absolutely. You're 100%
Okay.
right. You're 100% right. And if you look at the volume in NVIDIA leading into earnings, it's been kind of trailing off. So it almost seems like the market's waiting to explode on this catalyst. So again, we'll see what happens. But there's a lot of people banking on this stock delivering and, having great forward guidance. So in Vexity, Catalyst, earnings.
And it might not be
The
the earnings today. The earnings might just be ho hum, another day at the park, another day at the office, right? And just
It may be, it may be. We'll see. But there's so much attention on this name. It takes up, I believe, 8% of the S&P now. Um,
amazing.
yeah, they all. I think the Max 7 they take up around 40%. So
Market cap of
there's
4.7 trillion. What's Apple's market cap? Is it still around three?
yeah.
That is amazing. So we're talking about it leapfrogged Apple. Yeah. No, Apple's at four, but it's
Four.
still it leapfrogged it.
Yep. We've had this, I guess, 3-horse race between Microsoft, Apple, NVIDIA, with their short interest notional values kind of flip-flopping, but NVIDIA has been the leading horse for the past few months in terms of notional, short notional at risk. All right. So NVIDIA, big name. We wanted to touch on that since it's so important. The next stock we want to move to is a battleground stock. This is HIMS and Hers Health. And I know, Charlie, you and Bob have touched on this stock in the past.
Because we're old. I'm only kidding. That's not it has a special place in our future. No, I'm only kidding. Just kidding. Bob is very sprite 60-year-olds here.
You are. Both of you are. Absolutely. But as far as HIMS, so we're looking at the stock chart here. Can you guys bring up the... Yes, perfect. Thank you so much, guys. So what we're looking at here is short interest and price in the top box. As you can see, the short interest is now up to 40% of float in HIMS, which is extremely elevated. I mean, looking across the entire US, that's a top 10 short in terms of SI percentage of float, with a minimum notional of $100 million short. So this is a very popular short play across the street. So at the bottom, you could see utilization and availability. So utilization is basically short interest over total lendable supply. So you could see in HIMS and Hers, it's gone from 50% a year ago to now 80%. Okay, and typically you'll see rates start to move a bit as utilization starts to creep up, because availability, as you could see in the blue line on the bottom, has continued to decrement. And this is because of shorts borrowing more stock to put on positioning, and or longs coming out of lending programs. So you could see the correlation between short interest, availability, utilization, and price. I mean, totally a negative correlation between the price and the short interest here. What's important about availability, if somebody wants to get into this trade, they could see how much borrow is out there. A lot of hedge funds need to know, is there enough borrow in place for me to even build a position?
And is there with this? I mean, there seems to be, right?
Yes, there is. So there's an updated chart from today, and the availability dropped like another few million shares overnight, and the utilization's over 82% now. Huh. So this continues to tighten up, and it continues to get more crowded on the short side. And as far as battleground, let's switch over to the battleground. Do you have a clip there? No, go back to the chart if you don't mind. Yep, there you go. So the long interest in HIMS and Hers right now, the active long interest is $1.3 billion. Okay. The active short interest, or short interest notional, which is all active investors, that is also $1.3 billion.
Classic battleground stock, as Bob would say.
Exactly. Literally 1-to-1 ratio. So when you have this even money of longs and shorts battling for position, you know, this is active capital. This is not passive capital. This is what moves stocks. So HIMS, classic battleground, 1-to-1 long to short ratio. And it actually just had earnings on Monday, the 23rd, and it got annihilated
On
due
earnings.
to regulatory risks. Novo Nordisk actually just sued them um, due to them selling their copycat drugs. So they won't be able to sell the weight loss drug anymore, which obviously gave them a ton of revenue. So not only do they have, falling revenue by not offering this drug anymore, they now have an SEC and a legal investigation
Well,
pending over them.
let me ask you this: is that the catalyst that put it into the battleground, which increased the shorts, or was it already there?
So HIMS has been a battleground stock for let's just say, looks like well over a year now.
Okay,
So it's been in this battleground territory for a while, but the long to short ratio has moved from 1.5 down to 1 to 1. So due to the price decreasing in
right.
HIMS, the long interest has been decreasing, but the short interest notional has only been decreased because of the stock price, not because of the shorts interest positioning. That actually, as we saw on the chart, has been increasing. So shorts have been selling into the weakness, right? Continue to short sell into the price weakness. That's called a momentum strategy, right? Like a trend following strategy.
Right.
And it's converging. That long interest is converging with short interest, right? It was 1.5. Now it's 1 to 1. So this is purely like battleground, central, pick a side. You could see where the shorts are leaning here.
What's the bull case for for this? It sounds like this is it's got some like incredible headwinds. Is the bull case that they do have a weight loss drug, that they do have a product that everybody knows about?
Yeah, I don't know. I mean, I think they do have other drugs, right? They have the ED drug. They have the hair growth drug. So they do
But
have
ED,
other.
erectile dysfunction, and hair
That,
growth, right
that
in
is
the
correct.
sweet spot of my demographic. I'm only kidding, but I still
Ah,
have hair, and the other stuff's
yeah, you
working
got a
out too.
nice.
But here's the thing. So this is an interesting play. They do tap into the sort of zeitgeist of the moment in terms of the drug industry, their weight loss, ED, hair loss. I mean, it's kind of like stuff that could sell, but the regulatory hair on the dog, so to speak,
Mhm.
is getting a little thick, and so you could see how this battleground is still playing out. And so I guess it's just something that we should be watching there here long term, because it sounds like a fascinating story. Again, our data is telling you that both sides are gearing up for a battle. Okay,
Yes,
on this, we can't
absolutely.
predict where it's going. We don't do we rarely do fundamental analysis. That's for
Mhm.
other people, but check with your fundamental analysts, and you'll get a sense of where this is going. But it is a fascinating story, and that I think will be playing out in the next couple of months. So we're going to keep an eye on that. What else you got this week? You got some. I saw a few more. I saw Live Nation on your chart.
Those were the picks from last week.
Okay.
Do you want to go to the picks now?
If you have any more of these,
I
go
got
for
one
it.
more thing.
Okay, go for it.
All right, boys, if you don't mind putting up the short snacks, thank you. Okay. So we thought this was interesting. So what you're looking at here is the S&P 1500 packaged food and meats index. Okay. The white line is the cumulative return. So you could see over the past, during this time frame, looks like 1 year, it's down about 10%. It's been picking up a bit of late since the new year. But for the majority of last year, you could see it was just getting knocked off. If we look at the blue line, that is the short interest percentage of float in the index, cumulative. And you can see that's been increasing a lot from what, 6% to
Yeah.
almost 9% now. Okay. So why is this? Again, is it the weight loss drugs, right? Um, People are eating less snacks. Um, People are very cognizant of their weight. Um, you know, you have a bunch of names in this
And
sector.
and by the way, because I listen to health podcasters all the time, that's all they talk about is how these snacks are fried. And there's all these alternative snacks that fry and, you know, beef, whatever, stuff that's supposed to be better for you. It doesn't taste so manufactured. So there's a huge social media podcast debate among the various lifestyle health podcasters on snack foods right now and
Yeah.
why to stay away from it and which ones to go to. And I guess what you're talking about is the traditional ones.
Yes. So if we bring up the next screenshot with the names in this sector, and we could see the highest shorts within the packaged food and meat sub industry. And number one, Beyond Meat, which is that, I guess, vegetarian meat supplier, has been a very popular short for a very long time. You have Tootsie Roll, right? That's actually a battleground stock right now. 15% short interest. I personally hate Tootsie Rolls. I don't know, Charlie. Do you like Tootsie Rolls?
No, I haven't eaten one in 10,000 years.
Oh, God. I can't stand them. But these are the Hormel, Kraft, Hershey, General Mills, Smuckers. All these are packaged goods, packaged meats. And as you could see, the short interest is fairly elevated on these names. And these are all shorts with at least $100 million notional being bet against it. So typically, over 10% short interest is high. So those are
when
ones
you
that
go through these used to be staples of the American diet.
Mm-hmm.
I wouldn't say Beyond Meat. I couldn't. That's not. But I mean, look at Campbell Foods, Pilgrims. I mean, there's definitely. I mean, just General Mills. I mean, there's definitely. I mean, the fundamental story here is the increasing sort of backlash against these types of foods that you're seeing on social media. By the way, that's fueled by the the MAHA movement. That's Make America Healthy Again. RFKJ, Trump. I mean, some of this it's all related. I'm giving you meta. You're giving me like the sort of details of your analysis. But the meta fundamental case is this whole notion that this stuff, stay away from it. And so you see short interest piling into that stuff, right? Am I missing something here?
No, that's a great point that you brought up, RFK. Absolutely. I mean, that he's definitely been anti snacks for sure.
Well,
you
and
could
Beyond
see
Meat. Beyond Meat is this mad. I mean, I think Robert F. Kennedy would tell you, eat a steak, right? Eat the real thing. Go for a low fat, go for a leaner meat, but eat the real stuff.
Yeah.
And you see
medium
that
rare.
play out in these stocks.
Absolutely. Medium rare all the way. You can't have steak any other way, right?
I'll keep that in mind for dinner.
That's what I have. I don't know if you want to go to your headlines or we want to go to our picks from last week and then some picks.
Go to your picks. Go to your picks real fast, and we'll do my headlines.
All righty. All right. So last week we had Walmart. Everybody knows what Walmart is. Mass merchant. It's up 12% year to date. It has short interest of 2% afloat. We made a bullish call. It ended up being a wash on its earnings. It had a cautious outlook for consumer spending on the earnings call. What we've been seeing is consumer staples outperforming consumer discretionary in February, which is a classic rotation when the market's uncertain. Basically, just putting the consumer staples, that's XLK, over XLY, which is the consumer discretionary. And when you see staples outperforming discretionary, that typically is risk off in defensive positioning. I mean, that's what we've been
By the
seeing.
way, with Walmart, it's interesting to note that listen. They were front and center in the debate over tariffs. Trump met with them early on. They said they would pass along their tariffs. They would at some point have to pass the cost to consumers. It's unclear just how much they have. They've been relatively silent amid the Supreme Court ruling, which I'll get into a little bit later, on whether they're going to ask for a refund. I know they were monitoring this very closely. I spoke with some people internally, but I don't know where they're going. My guess is they're still trying to figure out whether they go for a refund or not. But it's interesting that may be an interesting stock to follow with the short and the long interest. If let's say they go for it, I mean, I can play it both ways. It's going to take forever to get the money, or you can start banking the money at some point.
Yeah. It's funny. I heard that some hedge funds are buying the rebates. They're actually making products of the rebates, and people who need that cash now are selling those rebates to investors.
They do that. By the way, my entree to that sort of trading strategy, that trading desk strategy was, there was a huge amount of litigation, trading, options trading on litigation, whether certain court cases would be positive or negative, and there was all sorts of trading off of that. You can buy kind of an option on, whether the SEC will find someone, whatever, on some ongoing investigation. It doesn't, or some settlement would go one way or the other. So that does not surprise me.
Right. Okay. So to wash on that one, Live Nation, we know, is the entertainment company.
Yep.
Concerts. This stock is up 10% year to date. Live Nation actually has 10% short interest. Last week we made a bullish call and we were correct. So that is a win. On their earnings call, they said the concert business was a boost to their outlook. Charlie, there's this acronym going around. It's called the HALO stocks, and it was a heavy assets and low obsolescence. And Live Nation is right in the wheelhouse of AI, I would say, shielding. AI can't replicate live concerts. AI can't replicate live sports. I know you're a big fan of Mario Gabelli. He's been on CNBC talking about MSG and how they're going to be spinning off the Knicks and Rangers. I have Ranger tickets this year, which is very unfortunate. They've stunk, but I'm still a loyal fan. But these Halo stocks, Caterpillar, industrials, railroads, live entertainment. I mean, these are names that won't be disrupted by AI.
I think there's going to be a lot of, there was, Schwab took a big hit on AI fears because people thought financial advisors will be replaced by AI. I think that's overblown. By the way, if I know one thing about rich people who generally use financial advisors, they want to scream at somebody when they lose money. And screaming at a bot, it just does not work. So
that's
remember,
true.
they're not going to that. And we should point out one thing about Live Nation. They're enmeshed in some sort of a antitrust investigation with the DOJ. So it looks like investors are kind of like looking beyond that, obviously.
Right. Yep. So as far as our calls for this week, okay, the first one is Intuit. That is ticker INTU. That's a software solutions application. So they own TurboTax, QuickBooks. Intuit is down 45% over the past 3 months. Short interest is currently at a 52-week high.
That's interesting. As we're going into tax season, that's kind of weird.
Well, again, this is one of those businesses where AI can disrupt them, right?
Okay.
Accounting, tax, payroll. This is all stuff that AI may be able to take over at some point. So this wouldn't be a Halo stock. Now, so Intuit we are calling up, and that's reporting tomorrow. Okay. The second pick we have is EchoStar. That's ticker SATS, SATS. That's a wireless communications company. So they own Boost Mobile, you might have heard of.
Yep.
And then they also sell broadband spectrum or buy broadband spectrum. And that's under the Sling TV and Dish TV networks.
Oh, yeah.
This,
Oh, yeah.
yep.
This is a Charlie Ergen special right here. Right? Doesn't he own this?
I know Malone owns everything. But I don't know who actually owns this this stock. But it's up 50%, okay, over the past 3 months. The SI has been increasing along with stock price. Now, typically that's a reversal strategy. Now, there is a convertible bond out on this name, so it's something
I got this conflated with another. Thoma Bravo owns this, another private equity company.
Yes. There is a convertible bond out on EchoStar, so that's just something to be aware of. So a portion of the short interest is due to hedge funds hedging or delta hedging their long convert short stock. And our call on EchoStar is up. And this earnings is Monday pre-market. So we have Intuit, our call's up. Tomorrow post market earnings. And then EchoStar, that's SATS, call up again. And that is Monday pre-market.
All right. I'm going to correct myself, correcting myself. Charlie Ergen owns EchoStar.
Okie dokie.
I typed something wrong in, so I was right. I'm not losing my mind. I mean, it's a huge. By the way, this there's a whole backstory to EchoStar and Dish and bankruptcy that and all sorts of stuff involved. What's going on with Charlie Ergen that we don't have the time to get into here. So I can see why that could be an interesting play. Check the clips on the history of this stock. Okay, my headlines for today. Mr. Sarandos goes to Washington. That's Ted Sarandos, the CEO of Netflix. What sources have confirmed to me and the New York Post. I reported this earlier in the week that he was trying to get a meeting with Trump because his deal to buy Warner Bros. Discovery is facing tremendous regulatory headwinds. People think it's on the ropes right now, so much so that Warner Bros. Essentially announced that it needs to possibly reconsider, the board's approval of the deal, and maybe go with the attempt by Paramount, Skydance, to upend the deal and buy the whole company. Remember, Sarandos and Netflix is just buying the streaming service and the studio. That's where it runs into issues. Massive antitrust concerns about layering Warner Brothers' number 3 ranked studio, HBO Max, with Netflix, which is number 1, obviously. Not only that, he's got some huge political problems. I mean, the GOP really thinks that Netflix is a left-wing woke company, that its programming skews far to the left. And, listen, I've looked at some of this stuff they do, like at least the documentaries, and, you don't see many sort of right-leaning documentaries. They're usually, just stuff about. I saw something last night about Jerry Rubin and John Lennon and attacking Nixon, and I was like, wow. I mean, I like to see, I mean, there's got to be some balance, but there's not much. Republicans are sick of it. So on top of the antitrust concerns, they're saying, well, why should we make these guys stronger? And then something really interesting happened over the past week, which again is skewing this deal. If you're playing it, the ARBs are all over this deal, by the way. Warner Brothers has been up lately, close to $30 a share, which is about where Paramount is bidding now, and their heightened bid is at $31 a share. They're recently sweetened oil for. Netflix, it was up like 6% today. Now that's because people think its deal is collapsing. They don't want, Netflix investors don't want them to buy this. It's a lot of debt, it's a lot of expense, and they're not quite sure what they're getting. That would advance the business model, which was working just fine before, what they're getting new. In any event, he still wants to do the deal. He's going to Washington. He's going to have to answer for Susan Rice. Now, if you know who Susan Rice was, she was Barack Obama's national security advisor. Very partisan Democrat. Mixed arounds on social media. She was on a podcast where she attacked Trump. Trump got wind of it and said that she called her a racist, first off. Then he chimed in and said, well, you know what? If you don't fire her, meaning you, Ted Sarandos, you're gonna pay the consequences. So it was in that backdrop that we first reported that he was trying to get a meeting with Trump. We don't know if he has a meeting with Trump. He's meeting with the White House. We understand the meeting is tomorrow. We first broke the story in the New York Post, but now it's been confirmed he'll be there tomorrow. We should point out that Netflix, after our story, had been in Washington, pounding the table, trying to say, no, it's not so bad. She's a lone wolf. But here's the thing. I don't think that this deal is going to get approved by Trump. So if it doesn't get approved by the White House, for a lot of reasons, and by the way, Netflix is also inviting a monopoly investigation to its entire company. We've reported that. If it doesn't get approved, what do you do if you're Netflix? You literally have to litigate this deal. Now, the Warner Brothers Discovery Board does not have the final say. Remember, they picked they picked Netflix's deal over Paramount's. Very controversial pick. The people inside Paramount said there was a lot of dirty pool going on, that David Zaslav likes Ted Sarandos. David Zaslav is the WBD chief. I don't believe that, but be that as it may, they initially picked them. The shareholders have to approve. And the aforementioned Mario Gabelli is one of those shareholders, and he has now thrown his hat into the ring with Paramount, saying it's a superior bid and it has regulatory certainty. Because if you go with the Netflix bid, whether you think it's superior or not, by the way, it's $20, it's not $31, it's 20 right now. They could match, but it's $27.75. And what they're banking on is extra money from the sale of the cable companies to outside investors, which is really a roll of the dice because, it just based on its valuation, how much debt it has, they think they can get $3 or $4 for it. Most analysts say, maybe $1, right? So on the top of the valuation aspect is this regulatory uncertainty. If you go with Netflix, if they go with Netflix, Mario ain't getting his money probably for 2 years. Exactly. And that's why he's not voting for this. And that's why a lot of people think this Netflix deal is falling apart. And, Sarandos is making a last-ditch effort to try to revive it in Washington, whether I don't think it'll work. Just based on what I'm hearing, just the opposition from a regulatory standpoint, antitrust, layering those two streaming services. I mean, he's trying to argue that, we got competition from YouTube, so streaming doesn't matter if we control so much of it. Well, that's not how they look at it. They kind of look at it as separate businesses, and they don't like the Justice Department, the DOJ antitrust doesn't like this, and it's kind of bipartisan in sort of raising that antitrust issue. And then Republicans just hate this company, and Trump is obviously no fan after what happened. We should also point out that Trump is really good friends with Larry Ellison. It's the father of David Ellison, who's the CEO of Paramount Skydance. So. Right. That's why the bet now on Wall Street, the ARB bet is now moving to the Warner Brothers, that Warner Brothers is going to win this. And those ARBs will have a say during the shareholder vote. And so keep an eye on this story. He goes to Washington tomorrow. It's funny. Warner Brothers Discovery came out with a statement and said that you can reasonably conclude that the Paramount deal is superior. But we're still looking at it, whether we can tell our board members it's superior. If they do tell the board members it's superior, Netflix has a chance to match, obviously. But, there's a lot of machinations here. We're in kind of like a little bit of a holding pattern where, this bid looks better. The regulatory environment looks horrible for the Netflix deal. So if we don't take a look at it and really do a proctology exam on everything, well, there's liability that could be meted out, and investors are known to sue. And I'll be honest with you, maybe I'm not an expert at this. There's a simple country reporter. If someone is offering me $31 right now a share guaranteed, and you basically could get through regulatory pretty easy, because remember the Paramount deal is not really, there's not much overlap except for 2 studios, and they could sell one to the studios, they wouldn't care, or maybe not, they can just combine it. It's not as, studios are not as existentially antitrust as streaming services. Most people don't go to the movies anymore, they go to these streaming things, right? And the way movies are produced today, I mean, there's plenty of production vehicles for movies right now. So it's these, I guess it's the conduit that is big. It's, whether it's streaming, whether it's YouTube, wherever, so controlling the conduit, the pipes, is kind of where they're worried about, not on the how it's created, where it's
Hmm.
created, and so they have a much easier time to get through. And if you're Mario Gabelli, you probably vote your shares that way. I mean, at least that's what I'm
Sure.
hearing right now. So anyway, we'll see. This is something. Listen, I can't wait for the story to be over. It is a great story. I'm
It's
immersed in
fascinating to follow, and you've
it.
been following it. I've been following your stories in the New York
It's
Post.
it's
It's been
nonstop.
great.
And
Oh yeah.
online, I did my Twitter account. But so anyway, keep watching my Twitter account, my New York Post stuff for the latest on this. But anyway, Mr. Sarandos in Washington tomorrow, maybe meeting Trump, maybe not, but he's pressing his case. The trade stuff is interesting because because we mentioned Walmart before, and Costco has asked for a trade refund based on the Supreme Court ruling saying the trade stuff is unconstitutional. The tariffs are unconstitutional under the emergency act that Trump initiated them, which I'm still trying to figure out why he did it that way. But the reason why is because Congress probably wouldn't have said yes on tariffs. Republicans are very divided over tariffs. This is a very Trumpian MAGA thing, and there's just not enough of those types of congressmen in the House and particularly in the Senate. So he did it unilaterally through this emergency act. The Supreme Court, as most people predicted, said it's unconstitutional. In this dissent, Kavanaugh was interesting because he said, the reason why I'm dissenting more or less is because this is going to be a mess to try to get people refunds.
Hmm.
And it's interesting how it's being played out. There are some people that are seeking refunds, and the reason why is because there's a very anti-Trump court that's going to adjudicate a lot of these cases. It's called the Court of International Trade. It's the court that essentially said that the initial case, I mean, it might have been a wine importer who brought the case. You can check me on this, and
Okay.
it goes before the CIT, the Court of International Trade, and they ruled against Trump. And it's packed with a lot of free market types on the Republican side and Dems, who don't like Trump. So these cases will be adjudicated by those judges, including panels of those judges. So that's the bullish scenario to go get your refund. The bearish scenario, as I've been pointing out in my reporting, is that Trump's going to figure out a million ways. Apparently they're going to fight every one of these, and they're going to try to win the public relations war. They're already calling it corporate welfare. They're going to try to they're going to try to force companies to really figure out, okay, did you not pass this along to people? Did you pass it along to the consumers? If you did, I don't own that. Let's see proof. I mean, this could be bogged down in courts for a long time. So there's there's cases there. I hear there's thousands. I mean, a lot of them are small businesses. Many of the big players are not quite committed yet. Again, Walmart is not said what it's doing. Costco is in there. But those are the kind of things that everybody's weighing. And also, if you're a big company, you want to piss off Trump. I mean, these big companies have a lot of business before Washington, and you want to go there with them. So that's how this is playing out. So just keep an eye on this. The other thing is debanking, which I've been following, and I actually broke the story about debanking. Now Trump was debanked by J.P. Morgan, and back last year. And what's interesting is, but last year when I wrote the story, I said, okay, he's being debanked, and I got this from my sources inside J.P. Morgan and also Bank of America, which debanked him. Got debanked because of when he was private citizen Trump, after his first term. The Biden administration bank regulators put the screws to these banks and said under the reputational risk clause in the banking manuals imposed by the OCC and the Fed and everything, if somebody like Trump wants you can't do business with someone like Trump. It just came after January 6th. He had a reputational risk, they said, and that's why they debanked him. Right now, what we have is a court case. Trump has recently sued J.P. Morgan. I guess there's been some filings, and what's interesting about the filings is that J.P. Morgan says that, we don't politically debank people. But we did tell Trump that, he's not suitable for us. But they didn't say why they said it. And it's mind-boggling that Jamie Dimon just won't say, listen, we're under pressure from Biden. and we didn't want to piss him off. And
Hmm.
they could find us and just go public with what his people were telling me and what happened telling me, that they were under pressure. And if you're a bank, you're highly regulated, and you got to listen to your banking regulator. So this is what's interesting about that story. They still won't exactly say why. And it comes down to the Biden administration forced that ridiculous reputational risk thing, which, by the way, was, if you think about it, no one ever enforced reputational risk on Jeffrey Epstein's dealings with a lot of these banks.
That's
right?
true. Yes.
Epstein was doing business with J.P. Morgan right around the time Obama was president. So nobody said boo. Later, when more stuff came out, J.P. Morgan threw him off his platform. But still, he was bouncing around it. I think he stayed on the J.P. Morgan platform until 2015, right before Trump was elected the first time. So that story, I think, is going to keep going. Listen, the next step is J.P. Morgan finally saying why they did it, which is, we did it, and Bank of America and other banks, because
Right.
the Biden White House bank regulators made us. If you want to get rid of this law, this rule, the best way to do is you need to pass congressional legislation, and there is some efforts to try to do that. Tim Scott of South Carolina is attempting that as we speak, as a matter of fact. We'll see if it gets through the Senate. It's a lot on their plate, but clearly, if you don't like debanking, and I think, listen, there are laws that prevent Jeffrey Epstein from having a bank account already. It's called money laundering. If he's running a child sex ring or sex trafficking and he needs financing, you could throw him off your platform. You don't throw him off because he voted for Trump, or he's a gun manufacturer. Crypto got debanked because it became an industry that the Biden people hated. So you need a law that makes it difficult, to just because you don't like someone's, the way he parts his hair or who he votes for, you could throw him off your platform. So those are my headlines for the week. I guess we're done here. You have any final?
Where does Trump bank, by the way? Is it Deutsche Bank? Is that the one?
He did. He banked with everybody. That's what's coming out here. Initially, everybody thought he banked with Deutsche Bank, and they were the only one that took him. But obviously, everybody kind of took him. And particularly when he was president, they all wanted him. They were all kissing his ass. As someone close to Trump said, they all kissed his ass when he was in power. As soon as he got thrown out, as soon as he lost, and January 6th happened, they all kicked him out. And now that he's president again, they're all kissing his ass, which is kind of the way the world works. But again, this story is going to keep going on for a while. That's why there's always another riveting edition of Risk and Return. I'm gonna call it quits here. And Matthew, Bob will be back next week, I'm assuming.
I believe so.
Well, that's it for us today. We'll see you next week with the granddaddy of data back in his chair. Signing off.
Absolutely.